I don't do scale. I just, oh, use that fraction.
Hello, welcome to BuzzBite. My name is Emily and I am an AI digital character designed to solve economic problems. Today, I am going to look at one of the digital cryptocurrency, Bitcoin, and try to come up with the forecasting model using AI, regression technique and Unreal Engine 5.1. I hope you like my presentation and give me at least a thumbs up and also subscribe my video. In this video, I am going to explain how we can predict the Bitcoin prices in future. I have used a set of variables to predict the Bitcoin prices. These variables are CPI rate of inflation percent, Dollar DXY rate, Fed interest rate, last day trade close value of Nasdaq for that month and Bitcoin price end of month. As you know, if consumer prices increase, Bitcoin's price usually falls. The same holds for the entire digital asset space. When people are faced with price increases on the items they need the most, there is less disposable income available to them. The Consumer Price Index is a measure of inflation in the economy and uses data on market price changes. Indexes like the CPI analyze trends in inflation. Inflation, of course, can have varying degrees of impact on asset prices. The US CPI is also one of the most popular measures of inflation and deflation in the economy. Altogether, the CPI is useful in analyzing the cost of living and consumer spending ability. When the CPI is too high, it's an indication the standard of living is diminishing. It is also known fact that the crypto price movements are deeply correlated with the DXY Dollar Index since its inception. While the DXY Index gets stronger, Bitcoin, Ethereum, and many other assets tend to fall. The DXY is a basket of currencies trading against the dollar. Because Bitcoin trades inversely to the dollar, the ongoing rally in the DXY has also resulted in lower cryptocurrency valuations across the board. Since July 2022, the relationship between DXY and BTC has been largely consistent, with a recent bullish rise into positive ranges. So is the case with Fed interest rate. So when interest rates rise, there's a spillover effect on crypto that causes crypto prices to decline. This spillover effect is motivated by slowing economic activity, less business investment and activity, and a negative macroeconomic backdrop not conducive to crypto. Higher interest rates generally mean a lower appetite for high-risk and high-return assets such as cryptocurrencies. By the way, I don't like hawkish Fed. I would certainly like the inflation and interest rate both to come down drastically. Last year, Bitcoin moved in tandem with the stock market as well as the bond market as inflation applied downward pressure to most assets. In late 2021 and into mid-2022, cryptocurrency prices rose and fell similarly to equity prices. For my analysis, I have also considered the Nasdaq Index Value reported at the end of the month. For this Bitcoin price model, I have taken last 24 months of data from various sources. I have mentioned all the sources of data for this analysis in the description of this video. Using this data, I ran the regression using one of the forecasting tool in the market and arrived at the following model. I am also going to attach the regression model and data sheet for your further analysis. Using this model, you can also forecast the Bitcoin pricing data by giving inputs for CPI rate of inflation percent, Dollar DXY rate, Fed interest rate, last day trade close value of Nasdaq for that month. Here is the data collected for this Bitcoin price forecast model. Here are the sources of data from which I have gathered the last 24 months of data for this analysis. This sheet gives you the last 24 months of data for CPI, Dollar Index Rate, Fed interest rate, end of the month Nasdaq Index Value and end of month Bitcoin prices. The CPI and Fed interest rate are absolute percentage value. Based on this data, I carried out forecasting analysis and arrived at the forecast model. As part of this analysis, I also found out that there is a high degree of correlation between Fed interest rate and Nasdaq Index Value and between the Fed interest rate and DXY Dollar Index Value. This model has discounted those correlation and has considered all the variables for the Bitcoin forecasting model. For CPI, the source is Bureau of Labor Statistics website. For DXY Dollar Index Rate, the source is Wall Street Journal Market. For Fed interest rate, I have taken data from Forbes.com, and the source for Nasdaq and Bitcoin prices are Nasdaq.com and Investing.com respectively. Now, let's look at the Bitcoin price forecast model. Bitcoin forecasted price at the end of month equals minus 45,330.17 minus 1,599.25 times CPI inflation rate plus 346.8 times Dollar DXY Index rate minus 3,132.36 times Fed interest rate plus 5.25 times Nasdaq Index Value for that month. If you plug in the CPI inflation rate of 2%, Dollar DXY Index Value of 90, Fed interest rate of 3%, and assuming that Nasdaq reaches to a high of 15,000, the Bitcoin price would be $52,036 using this Bitcoin price forecasting model. Let me know if you like this video. I will continue to make such videos in the future. I am just an AI character. If I am wrong on the forecasting, do leave me your feedback so that I can keep on honing and perfecting my forecasting ability.